Good afternoon, welcome to GrainTV. My name is Cody. Bills Brock Shimano. Today is Monday the 7th, and we had the market moving lower for corn and soybeans, but able to take a step higher for wheat, which traded up 6.5 cents. For corn, we ended up down 2.5 cents, and for beans, trading down 9.5 cents. One thing to keep in mind is we did have a nice new crop sale to China for 120,000 metric tons delivered for $14.15 beans. Brock, we did have export inspections as well this morning. What did we see there?
You know, there wasn't really any surprises in the export inspections report this morning. Wheat and corn both came in above analyst expectations. Soybeans right at the high end of analyst expectations. Wheat was at 606,000 metric tons. Corn at 1.3 million metric tons, and soybeans came in at 509,000 metric tons. So pretty good showing all around. It was slightly supportive for the market, but we didn't see it at the end of the day actually hold up corn and soybeans. If we take a look at where we stand for this marketing year and thinking about the report coming up on Wednesday, you can see here this corn chart that the green line is the seasonal pace to meet the current USDA projections. The red bars are what we're seeing for exports leaving the country. You can see over the last several weeks we've beat the seasonal pace pretty easily in the last several weeks, and you know, for the marketing year we're about 30 million bushels ahead of pace to meet that current USDA projection. So that'll be something we'll have to watch moving into Wednesday's report. We know that export sales are about 258 million bushels ahead of pace, so there's a little bit of discrepancy between where export sales are and where export inspections are. So that gives the bulls a little bit of fuel, perhaps, to maybe push the market a little bit higher to pull some of the grain out of farmers' hands.
Absolutely, and one thing to keep in mind too, and I think one of the reasons why we traded down for soybeans today was really the fact that we are seeing some South American beans hitting the U.S. shores. On Saturday, we did get one of many shipments to come of South American soybeans. This one in particular landed on the Gulf here, and I think this is the sort of thing, this is the sort of story that, you know, we heard talk of this, but when it actually happens, I think it's going to affect not only the cash markets in the U.S., but I think it also could affect the futures. I think that's one of the reasons why we saw soybeans sell off a bit here today. Brock, we have wheat also able to hang in there. You know, it's been able to trade a bit higher here today, coming off a 200-day moving average. What's your expectations there?
You know, we were supposed to get the crop progress report out this afternoon. The USDA failed to get that out today. They did postpone it one day till tomorrow at 3 p.m. Central Time. That'll be out. I think the buying that we saw today was in anticipation of the good to excellent ratings on the winter wheat crop falling a bit. Going into dormancy, we were sitting at about 62% good to excellent. Analysts are expecting estimations of 35 to 40% good to excellent on the winter wheat crop in tomorrow's report. So I think that we saw some buying interest come in and push the market up just a little bit for wheat. As far as corn and soybeans are concerned on the crop progress, you know, there isn't much to be anticipated for corn and soybeans as far as planting progress is concerned. So a big number in that report tomorrow is going to be the winter wheat condition ratings.
That sounds fair enough. Guys, thanks a lot for tuning in. We will go over the expectations for the WASDE report coming up here on tomorrow's show. Thanks a lot for tuning in. Remember, you can take a demo of the mobile trading platform by going to grainhedge.com and signing up in the box in the top left-hand corner. We'll see you later on tomorrow.